So what is up YouTube? In today's video, we're going to be talking about Nio again. So we know that Nio Stock is offering 60 million new shares, which means 60 million new Nio shares will enter the market. This means that the amount of shares outstanding will increase by 60 million, meaning one share of Nio will have a less equity stake in the company. And this is also known as share dilution. So usually when a company offers new shares, the share price tends to decline, and that's because more shares of that company are entering the market, and that means each share has a less equity stake of that company. So basically one share has less ownership in the company after a share offering. So knowing that the share price might decrease, why is Nio doing this? So this share offering can give Nio up to $2.7 billion in cash. So this cash will help Nio fuel more growth in the future as every car they make gets sold. So this cash can be used to improving manufacturing and distribution capacity. And this isn't the first time Nio has done this. They had a 7 million share offering when the stock was at $17. And the timing is based on the demand of the shares. So because when it was at $17, there's a lot of demand for Nio shares, they offered more shares because they knew it would be bought. And it's the same case for now. And looking at their balance sheet and how much money they're losing year over year, they're going to have more share offerings to raise more capital. And this isn't a bad thing at all, as Tesla did this numerous times. Whenever there's demand for their shares, they're doing it now, and they did it back in September as well. And we all see how Tesla is doing now. It just really depends on how Nio uses the money, and so far they've been using it pretty good, and they were able to fuel more growth with it. So yes, the share offering is affecting Nio's stock price in a negative way, and we may continue to see that effect. And with this and the China delisting news, the stock could go as low as $30. And if you are a long-term shareholder, this shouldn't be a bad thing at all, because not only will it create a buying opportunity, but you know Nio will have enough cash for future growth. And expect share offerings to happen and Nio's stock price to be extremely volatile, because Tesla raised money very often. So if you don't think you could go through this, don't invest in Nio. Yeah, in the long term, I do think Nio will do good, but in the short term, when they do offer more shares, we could see a share price decline of 5 or 10 or even more. So if you already hold Nio or are planning to buy Nio, just expect things like this to happen often, and just use them as buying opportunities to hold for the long term. And if you are trying to enter Nio right now, the stock may go into the low 30s with the share offering and the China delisting news. However, this may not happen as well, so just dollar cost average. And I know this was a quick video, but I just want to talk about how the share offering would affect Nio's price and how Nio will continue to do it in the future. And when there is a share offering, the share price will most likely decline, and instead of panic selling, just use it as a buying opportunity if you do plan on holding this company for the next 3 to 5 years, because there is a lot of potential with EVs in China, and they will most likely expand into other markets like Europe very soon. And yeah, so this was just a quick update on Nio, and if you guys did enjoy it or found it helpful in any way, please do leave a like and subscribe. Also comment down below your thoughts on Nio, and if you guys would like to see any other stock analyses or stock news.